This is Chip Gibson, half of Brothers of Risk, and I wanted to give an update on the general marketplace and what's going on for the property casualty rates in the rate environment, because it's getting pretty tricky out there. The rates are going up. For example, the big aspects are property, auto, GL and umbrella or excess liability, and D&O. So the real reasons, there's a lot of reasons behind that, and some of the stuff you've seen in the news. For example, for property rates, California, a lot of California is on fire. You probably have seen the smoke from wherever you live across the country. It's not good, and it's consistent across the past few years. And so that's driving up rates nationally. Next piece, commercial auto. While COVID has knocked down travel and a lot of driving, still the cost of claims have been going up, from the technology in the cars to the distracted driving. It is just taking a number, and the numbers of claims are showing that. The next piece gets to GL and umbrella liabilities. And this one is where it gets a little more complicated, because the problem lies with the profitability of the insurance companies. And insurance companies really are a macro KPI, key performance indicator of insurance companies is a combined ratio. So that's when you take the expenses and the claims and divide it by the total premiums. And that's a percentage that shows you really how profitable they are. So for example, if you are 100%, that means that for every dollar of premium you take in, your expenses and claims equate to the same amount of money. So if you're below 100, that means you're making money. And what really needs to happen now is that usually the interest rates and bonds and performance of the markets can really help. So the insurance company's underwriting doesn't have to be as strong to make money. Now, with treasury yields, 1%, below 1%, that's not a good return. So they need to make money in underwriting. So what's happening is, this is where we're seeing the premiums go up on these lines of insurance, because these lines of general liability, umbrella have longer claim periods of when they get paid out. So they have to lock in that money. So that's where having lower interest rates, really, they can't make money on that, so they have to increase premiums. Last is public company D&O, and just D&O in general. It's getting tricky even from COVID. There's a lot of uncertainty in this marketplace. So for public companies, stats are showing that 1 of every 11 companies are being sued on an annual basis, which is huge. So really, the lawyers are winning and everyone else is losing, with the pricing going up, because it's a lot of lawsuits and someone got to pay for it. So I would say, what can you do? I would say talk to your DG advisor. There are some Band-Aid fixes that we can help you with. For example, you can increase the introductory levels of insurance. So your umbrella might be some flexibility there. Look at alternative risk financing, and look at risk management. And spending money in risk management, get your claims down. That is always a good thing to invest in if there's something to work towards. So contact your DG advisor. Hope you enjoyed this half of BOR video podcast, and reach out to us and me with any questions. Thanks.